What's up, guys? It's Morgan from Lynchpin. This video is going to be one of a series of videos breaking down specific scanner settings that I use on FinViz.com to determine not only stocks that I want to trade, but investments that I will be making over time. So keep in mind that if you want to see more of this content, please feel free to like, subscribe, and turn on the notification bell because I'll be releasing these videos over the week to come. Now, a few items to note. The breakdown of this video is going to be the core settings that I use, then the modifying settings I use to break down even further the stocks on the list. And then lastly, I'm going to detail how I go about actually picking these specific stocks that I'm going to trade or invest in. And this intro video is going to be used on all the videos. I apologize. It's just easier to be more consistent with the information. And let's get into it. So first up, we're going to go to finviz.com, and we're only using the free version. Keep in mind that all of the timeframes are going to be the daily indicators versus others. I'm not sure about the paid version. However, we're going to go to screener and then all. And then from here is where we're going to adjust our scanner settings. Now to probably the most requested scanner option that I get, and that is penny stocks. What is a penny stock? Now, a common misconception is that penny stocks are anything that trades under $1, when in fact, it's actually referenced as anything under $5. Now, for me personally, I'm looking for the more volatile stocks. So in this case, I focus on having a beta, which is basically volatility, over 2. Then I focus the price under 2. If I need more options, I'll go under 3 or under 4. And then I look at the relative volume. Again, relative volume is in reference to 1.5 times essentially normal or average volume. So I really like to do that. You can mouse over individual scanner settings to see what they mean. Now, when I'm looking at what stocks I want to trade in reference to this, I will often sort by change. The reason why is that relative volume. And so in this case, XSPA has a change of minus 1.32% today. So that relative volume is important because it oftentimes will show you when volume is coming in, but the stock is not dropping significantly due to it. So the thought process is it's being bought up in preparation for a run. Other considerations or modifiers. I will often look at current volume. If something's dead and not getting a lot of volume, again, the relative volume is going to help with this, but if I want something that's trading a lot, I might pick something over 500K. Also, I can adjust how much float or how many shares are available. And the reason for that is because low floats tend to be more volatile and can have a run, especially when something's shorted. Essentially, it's the concept that was used with GameStop, sort of that same concept of when it's being heavily shorted or manipulated, it will see fluctuations that are bigger. One other thing that I might consider is the 20-day simple moving average. If the price is moving above that or is just below that, oftentimes that can signal the beginning of a run. For penny stocks or any trading strategy that I'm normally building a watch list for, I found it easier to focus on 3 to 5 stocks versus having a watch list of 10 or 20 stocks. That's just a personal preference, and you'll have to figure out based on your own trading strategy. But that's something of note that I want you to consider. You need to figure out what trading and investing strategies work best for you. But I do need to mention one thing specifically in regards to penny stocks. My video here outlines why I trade Snap on a daily basis versus how I used to trade penny stocks rather frequently. And I think it's worth a consideration that a lot of people think that penny stocks are the way to go, when in fact, I found that investing in everything from growth, value, dividends, to penny stocks, to options and day trading, all of these different diversifications are actually really good for my account and help me seize on opportunities in any type of market, whether the overall market is up or down. I don't have everything tied up in a single stock or strategy, and I feel like I have a lot of bandwidth to be able to move from account to account and strategy to strategy. As a matter of fact, penny stocks actually convinced me that it was a lot harder to trade and to trade successfully and consistently And ever since I moved to trading options on Snap, I've had an increase in consistency as well as profits. So that's just something to consider. Again, I'm not discouraging you. As far as for my trading in the past, this is where I started with penny stocks. So I hope that's helpful. Please remember again that this is going to be a part of a series of videos. So if you want to check that out, please be sure to like, subscribe, and turn on that notification bell, and you'll get the rest of those videos as I release them over the next week or so. Thanks again for stopping by. We'll see you again real soon. Bye.